Hello, traders. FX Pip Collector here. Today is Sunday, April 20th, and this is my analysis for gold. If you haven't done so yet, definitely do check out my free Discord channel, which is linked down here in the corner at the end of the video, and take a look at my website, fxpipcollector.com. So, anyways, happy Easter to everybody. I wanted to do a full top-down analysis on all the most popular U.S. dollar pairs today, because I really want to emphasize how important it is to do a full top-down analysis. I don't care if you're trading on the 1 minute, 5 minute time frame; it doesn't matter. You need to understand the direction of the daily, weekly, and monthly because that's your primary roadmap to tell you what direction to trade on the sort of time frames. Just like a roadmap tells you what direction to turn in a car, your higher time frame roadmaps will tell you what direction to trade on the sort of time frames. So gold has been an extremely strong trend, I'm sure as everybody knows. And if you look at the monthly, weekly time frame, it doesn't take long to understand why when you're talking about Elliot wave. First of all, this right here is the end of the last end of a correction on the monthly ended in 2016. So the last end of a correction on the monthly time frame was 2016. Then we have an impulsive up, wave one. We have an ABC correction, wave two. This is all a wave three right here. Wave threes are the biggest, strongest waves of a trend. But it gets even better because not only are we in a wave three, we are also in a wave one, a wave two, and a wave three of the trend that started right here at the end of a wave two. So that's why we are in a second degree wave three. We are in a wave three of wave three right now. A wave three all by itself is supposed to be the biggest, strongest trend wave in a trend. So a wave three of wave three is even extra strong. Now I had my 161% Fibonacci extension last week was my target for this wave three. It was the 161 Fibonacci extension, which was right around the $3,280 area. It literally just blew right past that area. Now keep in mind that 161 is the minimum that a wave three should go. Wave threes can go way beyond the 161.8. They can go to the 261. They can go to the 378. They can go pretty much as high as they want to. So the 161.8 was just my minimum target for this wave three. So keep all that in mind. It is extremely important. Now, going down to the weekly, now you can start to see the trends within a trend. I'm now seeing a trend for the wave one of wave three. I'm seeing the correction for the wave two of wave three. And this is all higher highs, higher highs, higher highs, higher lows. This is all a wave three of wave three. And there is definitely no reason to say this wave three is over. Most wave threes end with a 3, 4, 5 shape like this, which we would have to see on the daily, weekly time frame. So, in my eyes, this wave three is not even close to being over, and it could extend way higher than it already has. Going down to the daily time frame, we're starting to see subdivisions. We're starting to see trends within trends within trends. Definitely no reason to be looking for swords. That's for sure. This is an extremely long and strong uptrend. Going down to the 4 hour time frame, our last end of a correction is right here. We got high, low, high, low, high. No breaker structure, no significant lower high, no reason whatsoever to think that even this trend that started back here is over yet. So we are in a 3 of 3 on the weekly monthly. We are in a wave three of three on the daily. On the 4 hour time frame, we got a trend that started right here that is not over yet. So hopefully you're starting to understand why I've been so adamant about looking for longs only. Now, don't get me wrong, if you are a scalper, there might be a little money to be made to the short side. But if you are trading with the trend, even as a scalper, it would have been way more profitable to try to go long here and long there, long. That's why I've been so adamant about longs because not only are we in a wave three right now, we are in at least a second degree wave three right now, which is a wave three of wave three. Now, like I was saying in Friday's video, this might be a wave A right here. This might be 1, 2, 3 a B. This might be a C, and it might just keep on trending up from here. It also could turn into more of a complex pattern, especially because the market Might be a little bit slow on Monday because of the Easter holiday, which means it could be three waves down and then three waves up and then five waves down for like a 3-3-5 pattern, like a flat. So it could turn into more of a complex correction. It could just keep on trending up. I really have no idea. What I do know is we are in an extremely strong trend on every single higher time frame, and I do know that every single time I saw a fib bounce, a nice engulfing move to the upside, I would be going long, and I would learn and earn at the same time whether it continued the uptrend or whether it made like a 1-2-3 pattern and turned down. Even if it does make a 1-2-3 pattern and turn down, that still would most likely be profitable. And then you could just get out and then wait for another fib bounce and wait for another entry to go long. So definitely, definitely, definitely only looking for longs in an uptrend, no matter what time frame I was trading on gold. So anyways, don't forget to like and subscribe. And as always, thank you for watching and happy trading.